Bitcoin has characteristics gold doesn't. It's programmable. It's digital. It's infinitely scalable in terms of movement. Easy to move. You don't have to lug gold across borders.
Right, insurance.
And most importantly, I would argue it produces yield, where gold has a negative cost of carry. So if you're one of the people who are genuinely concerned that global money supply grows like 7-8% a year, and that's excessive, if you believe that's excessive and that's causing inflation, then you need assets that will beat that.
The debate between gold and Bitcoin has long been framed as old world security versus new world innovation. For centuries, gold was considered the ultimate safe haven asset, immune to inflation and government manipulation. But as today's financial landscape grows increasingly digital, some advisors argue that clinging to gold may actually limit your future potential. The suggestion to swap gold for Bitcoin is not just about speculation. It's about adapting to a changing financial system where programmable digital money is becoming more relevant than physical stores of value.
So last time I was on, we were talking about the decoupling of Bitcoin with tech stocks and its outperformance relative to gold. Now we've seen year to date gold doing really well, up 46% or so. Bitcoin doing well, up about 21%. Ethereum up about 25%. So it's decoupled in the opposite direction. But push back year on year, gold's up about 44%. Bitcoin's up 75%. Ethereum's up 58%. And even if you look at something like the Coin 50 index, a basket of crypto, that's up about 72% year on year. Now, if you go back 3, 5, 7 years, there's no question which is the better asset to own.
Performance metrics tell a story of contrast. Gold may hold its ground in moments of uncertainty, but over multi-year periods, Bitcoin's gains outshine. Advisors who advocate for the shift highlight this long-term trajectory, arguing that even volatility cannot erase the digital asset's record of outperformance.
I want to talk AI and the convergence with crypto and some of these terms, and you can explain it to me. But here's a couple bullet points. AI made intelligence scalable and programmable. Crypto is doing the same thing for money and value, and when you put them together, it makes programmable money that can meet programmable intelligence. So this is all MIT lab type stuff, and this is like looking into the future.
Gold cannot interact with artificial intelligence or algorithmic systems. Bitcoin, by contrast, can be programmed into the very infrastructure of tomorrow's financial and technological networks. For those watching the convergence of AI and blockchain, the choice seems obvious. Invest where the future is building, not where the past has been preserved.
We could be living in a world very shortly where AI agents are conducting screenings for cancer treatments. And the process of doing that involves maybe the purchase of data sets. And a scientist could do that 5 times a day. An AI agent could do it 5,000 or 5 million or 5 billion times a day in theory. For that AI agent to purchase that data set, to do that experiment at that scale, to ask it to rely on 100-year-old financial rails, it's sort of like trying to stream K-pop Demon Hunters on a 1994 dial-up modem. It just simply doesn't work.
That analogy cuts to the core of why Bitcoin advocates push so hard. In a world where digital speed defines progress, clinging to traditional financial systems, or to gold, feels like trying to watch a high-definition movie over dial-up. Bitcoin offers rails for a digital economy that gold simply cannot replicate.
And when we talk about programmable, it's flexibility in terms of we don't know where these agents are going to go. We don't know the advantages they'll give us. And so having money that's flexible, being able to do different things with it, that's equally important. But I think the basic is just think about just speed, right? You wouldn't try to stream a movie on a dial-up modem. We wouldn't ask these AI agents to transact with a financial system that's older than those modems.
Flexibility is another dimension where Bitcoin pulls ahead. Gold's role is static: store value, hedge risk. Bitcoin, however, evolves with technology, creating pathways for entirely new use cases, from decentralized finance to AI-driven investment strategies.
They've been coming, not just coming, they're there. They've been there for a long time. Everyone talks about this institutional wave. In my experience of dealing with pensions and endowments and sovereign wealth funds, they don't invest in waves. They're not lemmings running over a cliff in some giant wave. They're very, very cautious. They're very thoughtful.
Skeptics often point to volatility as a reason to stick with gold. Yet, institutions, cautious and deliberate in their strategies, are increasingly allocating to Bitcoin. This isn't a speculative rush. It's a measured recognition that Bitcoin represents a structural shift in money.
So if we're going to move to this world and have this wonderful advantage of these agents acting at infinitely fast speeds, they have to act on infinitely fast and scalable money rails. And that's what blockchain and crypto is.
Because I've always been fascinated by the singularity when machines know a billion times the sum total of all human knowledge. We have no idea what that means.
This reflection highlights the scale of the coming transformation. As artificial intelligence evolves towards superintelligence, its foundation will require financial infrastructure that can keep up. Bitcoin and blockchain provide the speed, scalability, and flexibility that gold simply cannot match. In this way, Bitcoin doesn't just represent money, it represents compatibility with the next wave of technological progress.
A couple $1 trillion was sitting in money markets because at 5%, 4.5%, 5.5%, that's nice. You're getting close to beating your target inflation rate.
Yeah.
As rates tick down, that unlocks those assets. Now, all of it's not flowing into assets like Bitcoin, but a portion will. That's what makes us bullish.
Here, the argument turns practical. As interest rates fluctuate, massive pools of capital move accordingly. While not all of that money will flood into Bitcoin, even a small percentage could ignite dramatic growth. The bullish case isn't only about technology. It's also about the flow of capital seeking stronger returns than gold or traditional safe havens can provide. The case for swapping gold into Bitcoin isn't about abandoning tradition. It's about embracing transformation. From outperforming gold in multi-year horizons to serving as programmable money in a digital-first future, Bitcoin is becoming less of an alternative and more of a necessity. Advisors who once urged clients to buy gold are now urging them to reconsider, warning that those who cling only to the old ways risk missing the new foundation of finance.
So it depends on your perspective. I don't have good numbers for you. If you invite me back, I'll have good numbers.
80% is individuals? Do you think it's 90%? Do you think it's 50%?
I think it's the majority are held by individuals if you consider the ETFs as being individually held. Right. But if you invite me back, I'll give you exact numbers.
Now it's time to hear from you. Do you think gold still has a role in protecting wealth? Or is Bitcoin the future-proof asset that everyone should be holding?